Hi guys, welcome to the Thinking Crypto YouTube channel where the goal is to provide you with quality crypto content. We are closely approaching 40,000 subscribers. We cover the crypto news and interview many of the folks who are building and investing in the asset class. I've interviewed CZ, Binance's CEO, the Winklevoss twins. Earlier today, I uploaded my interview with Bitwage CEO Jonathan Chester, where he talks about the new Bitcoin 401k plan that they are offering, which is really groundbreaking. It's the world's first. So be sure to check out that interview. And if you're new here, hit that subscribe button as well as the thumbs up button. Guys, Goldman Sachs had their webinar today, which covered inflation, gold, and Bitcoin. And we had covered this a few days ago, talking about the dialogue happening around Bitcoin from a lot of major Wall Street investment banks and firms and hedge funds. Well, Goldman Sachs decides to FUD Bitcoin, saying it is not a great investment. It is not a new asset class, crypto that is. You're going to lose your money, volatility. It's used to operate in criminal activities, which is like a lot of blatant lies and not giving the full story, because cash is used for criminal activities even more than Bitcoin, right? Even before Bitcoin existed. So they put out a hit job here trying to get investors not to go to the new asset class, which I think is a blockbuster moment for them, unless they change things. When I say blockbuster, we all know what happened. They did not innovate and they died. They did not stay up to date with the disruption that was taking place with technology. And we're seeing other firms are recognizing that. Now, before I go further, here's a snippet of the slide. Cryptocurrencies, including Bitcoin, are not an asset class. And they list all their reasons, volatility, blah, blah, blah. But what they don't say, they highlight the volatility, the 37% drop. But what they don't say, that volatility works both ways. That's why you have the high swings. You have low swings, but you have the high swings. That's why we're early, and the opportunity to make good, significant returns on our investment is really great, right? So a lot of people weighed in on Twitter. A lot of people calling out the blatant hypocrisy on here. Dan Tapiro said the following: Goldman Sachs does not make fees when a client buys Bitcoin. Absolutely right. Buying Bitcoin is an implicit rejection of buying assets that Goldman Sachs sells, upon which they make fees. Buying Bitcoin is a rejection of the worldview they sell, upon which they make fees. And of course, they're like a broker. They take people's money and they invest it in different things and they make their commission. Now, they could technically set it up like TD Ameritrade has set up, right? TD Ameritrade lists all the stocks, ETFs, mutual funds, and cryptocurrency trading, and says, hey, you can do it through our partner ErisX, because they're invested in ErisX, which I think is smart, right? They're not getting rid of other assets or asset classes. They're just including the new one, which is cryptocurrency. We see Fidelity is doing the same thing. They have 1 trillion of assets under management. And of course, they are very, very similar to Goldman Sachs, putting money in different asset classes. Well, they said, hey, we recognize crypto and digital assets, right? Same thing with bakkt, which is powered by the parent company of the New York Stock Exchange. We're going to launch our own crypto trading and custody service, right? And we saw JP Morgan just recently capitulated, saying, okay, we give up. We're going to give banking services to crypto exchanges. And I guarantee you what's coming next is that they're going to offer crypto trading services and custody. We saw Bank of America is getting all the patents and wallets and so forth. So it's coming. These guys are going to fight. They're going to put up a fight just like Goldman Sachs is trying to do here, but they're eventually going to have to bend the knee. They're going to get disrupted and they're going to lose money, because a lot of these major exchanges, and some of the news we're going to talk about today, guys, is going to show you how big these companies in the crypto market are getting. So Tyler Winklevoss, once again, I've interviewed the Winklevoss twins just a week ago. He weighed in because Goldman Sachs tried to put the narrative out there: Bitcoin is used for criminal activities, as though cash is not being used. So they give the half truth, right? They don't give the 360 view. They just want to put out a narrative. So here he says, tweeted, Goldman Sachs in 2019, 2.8 billion in Bitcoin was sent to currency exchanges from criminal entities. Fun fact, Goldman Sachs facilitated 6 billion in money laundering via one MDB scandal between 2012 to 2013. Double standard much? So they blatantly ignored like the things they've been doing, and a lot of these big banks, right, where they've worked in facilitating money laundering. We know cash itself is being used for illegal activities. People are going to use any medium of exchange of value for illegal activities. That is what the law is set up for, to to stop that. If it's not Bitcoin, it's going to be something else, right? So the narrative that it's only used for criminal, like, that's stupid, because so is cash. Like, what do you think people have been using for criminal activities before Bitcoin existed? Cash, like, hello. But this is the narrative they want to put out there. One-sided story, right? Not the full 360. And like I said, this could be a blockbuster moment for them, but who knows? This could be smoke and mirrors, complete smoke and mirrors. And these guys, we saw Jamie Dimon do it, of JP Morgan. Remember, Bitcoin's a fraud, it's a scam, blah blah blah. And they tried to stop cryptocurrency trading and people buying crypto with credit cards and so forth. They tried to stop that, right? You guys remember the news. All along the way, over the years, secretly building JPM Coin, their own crypto, and now offering crypto banking services. So this could be a classic smoke and mirrors move. We'll have to wait and see, or it could be their blockbuster moment. We will have to wait and see. Time will tell. But these guys are pretty shrewd. They could be accumulating and just telling people to go the other way, and then later on they're going to sell it back to their clients. Who knows at this point? They could eventually partner with a Fidelity Digital Assets or an ErisX to get the trading of crypto going, just like TD Ameritrade did, but we'll have to wait and see. But they tried to put a hit job here today on Bitcoin and crypto, but I think people recognize the hypocrisy, the double standards, the blatant lies here. So they will eventually have to bend the knee. We already see JP Morgan, the biggest bank, all these major investment firms are getting in. Now, I just mentioned big things are happening in the crypto market, and Coinbase is becoming a monster. Man, they are going to acquire Tagomi as a foundation of institutional trading arm. So Tagomi itself provides institutional crypto trading and so forth. So I always tell you guys, watch what the big money is doing. Follow the money. And when you see acquisitions, mergers, partnerships, it takes time, it takes money, it takes resources to do these things. Why would they be making these investments if they think, oh, well, the prices aren't going to go higher in crypto? We already saw they experienced what happened in 2017. They know there's more money on the table. We are just a tiny, tiny speck here in this whole financial investment market and industry, right? And they know there's more money to come into this asset class, guys. That's why they're making the acquisitions, the expansions, hirings, and all that. So San Francisco-based cryptocurrency exchange Coinbase is finally acquiring Tagomi, a prime brokerage platform specializing in digital asset trading. Announced Wednesday, the two companies said the deal is expected to be finalized later this year without disclosing the financial terms. We are going to be integrating the Tagomi platform into our product suite, and it will form the foundation of the future of our institutional trading business. Key word there, guys, institutional. They already have the retail set up, right? You and I have used Coinbase. They're going to be building out all the on-ramps and infrastructure for the big money, all your hedge funds, Wall Streeters, rich people, all of that stuff, guys, because there's more money on the table to be taken here to get more of that into crypto. It's coming, guys, and that's why you see a lot of these companies like Coinbase, Binance, and so forth are expanding, right? They're investing the money, and it takes money that they could really save as cash for the company, right? For a rainy day, whatever. Their CEOs can take more bonuses, whatever it is, but they're using that money to expand, to grab more market share. So you guys got to really think about this from a business standpoint and see how that plays into the growth of the market, where you're going to see more demand, prices rise, but patience is the key. Now, another example of expansion, crypto custodian BitGo joins the race to provide prime brokerage services. So now BitGo, the custodian, is like, oh yeah, well, we're going to get into it too. We'll offer up trading because we want to make more money. They know what's coming. Crypto custodian BitGo is moving into the prime brokerage space, announcing a fully integrated suite of services Wednesday to serve institutional traders. Keyword again, I can't overemphasize this, institutional. Not for you and me. We're talking big money here. And I love it. This is the on-ramps are being built. The services will be offered by BitGo Prime, a new entity that will be headed by Nick Carmi, BitGo's head of financial services. Carmi joined the firm last year after stints at various banks and other financial institutions. So you have people from banks and traditional finance world that are getting into crypto. That is a great sign if you're an investor in cryptocurrencies. BitGo Prime has already launched crypto lending services and plans to expand these as well as build liquidity on its platform this year. BitGo CEO Mike Belch told Coinbase, he said, building a prime brokerage in the crypto space is a difficult undertaking, at least in part because the overall infrastructure is still relatively young. Key statement there. We are early, guys, and this market's going to mature. You're going to see more people get in, more traditional firms are going to come in and start building their crypto trading services. In his view, a true prime brokerage begins with regulated custody, followed by lending and borrowing services. This is great news, guys. This is what I want to hear as a Bitcoin crypto holder. Now, and this is actually very timely because this is talking about here Kingdom Trust, which is working with the folks at Bitwage. So if you watch that interview, Bitwage is working with Gemini, Kingdom Trust, and this Prime, I believe it's Leading Retirement Services. Yes, Leading Retirement Services. Couldn't remember the name there. But now they're setting up the on-ramps and infrastructure for you to put crypto in your IRAs and your retirement account. And here, focus on retirement. Crypto Custodian rolls out hybrid IRA offering. And of course, they're working with Bitwage to do the Bitcoin 401k. So, wow, guys, talk about just amazing things that are happening. So digital asset custodian Kingdom Trust is offering investors a single retirement account for traditional and digital assets. Called Choice, the South Dakota-based custodian is offering a self-service retirement platform where investors can buy, sell, or hold stocks, exchange traded funds, ETFs, and digital assets in one tax-advantaged account, said Kingdom Trust CEO Ryan Radloff. Currently, fewer than 1% of the 100,000 retirement accounts for this Kingdom Trust provides custody have any digital assets as part of their portfolio. So they're bridging the gap between the traditional retirement services and plans and all that and integrating crypto into it. Guys, so many big things ahead. And I'm not trying to sensationalize or hype this up, but I mean, look at what is happening here. I mean, I got into the market in 2016. We didn't have news like this. So I have that contrast. Some of you guys, if you got in last month or a year from now, you can say, well, whatever, right? Because maybe you started seeing the momentum of positive news. I've been here since 2016. There's people who've been in this market longer, and they also have the same sentiment that I do. Like, wow, look at what is taking place. It is on the rise. It's moving, and I'm super excited, guys, for the future of this market. I'm a long-term holder. These little swings on the weekly, monthly cycle don't bother me. I don't care because I am not day trading. If you're day trading, yeah, I understand that concerns you. But I'm a long-term holder. I've seen the data. I've lived through the parabolic run-up, the bear market. I understand bull, bear, and accumulation phases. And I hope you guys see that. These principles you have to get into your mind and understand and say, okay, I see I'm looking at it from a macro level. I'm following the movements of the big money. Who's setting up shop? Who's doing what? What are the governments doing? And all of these things are pointing the direction of the growth of this asset class. And it's only a matter of time before FUDsters like Goldman Sachs have to bend the knee to the crypto asset class. Hit that subscribe button, the thumbs up button, leave your thoughts and comments below, and I'll talk to you all later.